Good morning, you're watching Business World Live. I'm Danny Laurel.
And I'm Jess De Los Santos. Here are the biggest stories to kickstart this trading day, Thursday. No end in sight for oil price hikes as another big-time increase is expected next week.
With fuel prices continuing to soar, one oil company is offering a respite to motorists. Petrogas is implementing a price rollback for a limited time starting today.
The Trade Department is not ruling out the possibility of price increases in consumer goods, but the agency says there's no need to adjust retail prices for now.
And some conglomerates are now reassessing their targets for the year on the back of soaring fuel costs. We begin our broadcast with oil companies expected to impose a heftier price hike on fuel products next week.
And with the incessant increases, the Energy Department is not discounting the possibility that pump prices will hit 100 pesos per liter. Industry sources revealed that diesel prices could jump by as much as 13 pesos per liter, while gasoline may surge by up to 8 pesos per liter. But the Energy Department says this is not yet final.
Yung 5 trading days ang ina-average natin. So dahil 2 days pa lang yung nasa record namin, hindi pa namin masiguro kung yan bang pagtaas, hindi bababa or baka lalong tumaas pa until makumpleto yung 5 days na trading price.
With a massive hike expected next week, some motorists are gassing up as early as now. Meanwhile, oil company Petrogas is implementing a 3-day rollback on its fuel products starting today up to March 13. Petrogas stations nationwide are slashing diesel prices by 5 pesos and 85 centavos per liter and gasoline by 3 pesos and 60 centavos per liter. The company said the rollback aims to minimize the impact to motorists as another round of price hikes is happening next week.
It's not just PUV drivers, but also their passengers that are feeling the impact of these soaring fuel prices.
Many commuters are complaining about drivers overcharging fares. Mobile journalist Yeda Pascual with the report.
Pending government's decision to hike fares, some jeepney drivers have allegedly decided to charge or if not, keep the change instead. For some passengers, they are okay with this.
Kung ang pamasahe ko mula Baclaran hanggang dito ay 12, pwede na po siguro yung 15. Huwag naman po yung buong 20 pesos.
Malaki na rin kasi yung ngayon, bayarin sa gasolina. Kaya pabor din sa akin na ganun kahit na hindi na ibalik yung sukli.
But the LTFRB has a warning to jeepney drivers.
Wala naman kasing problema kung kusang binibigay. Pero po yung kapag hindi po nagsusukli yung ating mga drivers ay overcharging po ang magiging offense po niya.
If caught, jeepney drivers may have to pay a fine of 5 to 15,000 pesos. The vehicle can also be impounded or the jeepney franchise cancelled. For commuters who want to complain, they may call the LTFRB hotline at 1342. But for jeepney drivers in multinational Parañaque, they say they do not resort to this.
Nagsasoli po kami. Yung ibang mga pasahero, hindi nila kinukuha ang sampo dahil alam nila na wala nang kinikita kami rito.
Still, they call on the government to act immediately on the fare increase petition.
Kailangan po namin ng konting dagdag. Tapos na po kami sa sobrang mahal ng presyo ng diesel. Halos wala na kayo may uuwi.
Mobile journalist Yeda Pascual, We Are One News.
Now, even airlines are feeling the pinch of soaring oil prices, with jet fuel going as high as $124 a barrel this month. To find out how local carriers are coping, we have on the show Steve Dailisan, Air Asia spokesperson. Good morning, Steve. Thank you for joining us today.
Good morning, Danny. Good morning, Jester, and to all our viewers from One News.
All right, so how has a spate of oil price hikes affected the airline industry, Air Asia in particular?
Well, first of all, we are still in a pandemic, and we're one of the hardest hit industries. And we're actually in the period of recovery. We've actually been optimistic about a strong rebound now that destinations that we fly to have relaxed the restrictions. And borders in the ASEAN are now reopening. But here comes another dilemma brought about by the ongoing fuel crisis as a result of the Ukraine-Russia conflict. And this is definitely not a good news for all of us. And in a short period of time, now that we are experiencing yet another crisis, there's another thing that the passengers would have to look into, and also for us in the airline industry. But for AirAsia, Jester and Danny, we have would like to stress that we have not imposed fuel surcharges. I think since 2015, although we were allowed to impose fuel surcharges by sometime 2018, but we haven't because AirAsia is known for democratizing air travel. It's part of our DNA that everyone should fly. But now, since it's another difficult situation that we're into, so we're looking at imposing fuel surcharge, but we're still monitoring the situation and make sure that everyone still gets to fly with AirAsia.
Okay, sir, realistically, is there a certain level of oil prices that you are looking at here to say that, okay, now we really need to have a fuel surcharge?
Well, the Civil Aeronautics Board, or CAB, actually allows airlines to impose fuel surcharges. So we have an established matrix, which is now currently at level 4 for the period of March 1 to April 31. Previously, during the previous months, January to February, it was only at alert level 3. As mentioned to you, we have not imposed fuel surcharges within the AirAsia group. It was actually abolished in 2015. And now that the level is as per the guidelines of the Civil Aeronautics Board, it's now at level 4, and at present we're looking at $141.70 per barrel. This is way higher than the IATA projected 2022 average fuel price at around $110 per barrel. But under alert level 4, we are actually allowed, the airlines are actually allowed to collect around 108 to 411 pesos per passenger. This is for domestic flights, and around 543 to 5,000 pesos for international flights. So this varies per kilometer, meaning if you fly further, you would actually, or you would expect a higher fuel surcharge reflected in your ticket price. But again, this will be under the discretion of the airline company. Similar to other Philippine air carriers, AirAsia is allowed to impose this, but we maintain that we will only implement this, make sure that this is very reasonable also to our guests. You have to remember that summer demand is already here, and we're expecting more passengers traveling since we are now alert level 1, and most of the destinations that we fly to are under alert level 1. And one way to trigger the demand is, of course, by offering affordable airfares. So we do not intend to discourage people from traveling. That's one. As mentioned to you earlier, it's not in our DNA, so we will carefully look at the imposition of such.
Okay, so but still there's that option to at least impose fuel surcharges. But again, like what you mentioned, it's going to be a calibrated response here for AirAsia. But at the same time, a number of airlines already seeking government aid here, at least the association. They're saying they're looking at the possibility of asking government to reduce, or if not, have a non-increase of government fees here. What in particular is AirAsia looking at here as a possible aid from government?
First of all, any form of assistance or subsidy will definitely help us in the airline industry. We're still in the pandemic, and we really want to make a strong rebound now that most destinations have relaxed their restrictions. As a member of the Airline Carriers Association of the Philippines, or ACAP, we subscribe to the previous statement of our chairman, Bonnie Sam. During the House Transportation Committee, he mentioned that, of course, our appeal is to reduce or not increase any government-imposed fees and charges, and we will continue to monitor the situation. Actually, it now depends on the airline as to whether they will impose or we will impose fuel surcharges. But any form of help from the government by way of subsidy or whatever, it is very much welcome for us in the airline industry.
Okay. Steve, this is not the first time that oil prices have gone up, and they've always been volatile. To what extent is AirAsia hedged and prepared for these types of events? And to what extent are these things controllable when we look at your your balance sheet, your fiscal discipline, especially since you're trying to cut costs as well during the pandemic?
Well, definitely, this is something that is beyond our control. It's dictated upon by the fuel cost worldwide. And we're actually carefully studying the imposition of fuel surcharge cost. This will also definitely help us in terms of our road to recovery. But at this point, we're trying to find ways to trigger the demand for air travel. And so it's actually a balancing act for us in AirAsia to make sure that we continue to trigger the demand and at the same time, of course, cut on cost and cut on the losses. So maybe we will continue to monitor in the next 2 to 3 weeks and see if there's really a need or if there's really a sufficient need to impose fuel surcharge. Anyway, we're allowed to do so.
Okay, at the same time, the oil crisis that we're experiencing now comes at a time when mobility restrictions have eased in NCR and a host of other cities here in the Philippines. That, of course, is going to be part of a revenue-generating measure. I believe you are adding additional routes here. Can you give us more details here on your additional destinations, domestically and international as well?
I'm actually here in Dumaguete City because we've already started selling your tickets for our upcoming route launch happening on April 8th. And we're looking at really opening more domestic routes, aiding tourism and our micro, small, medium enterprises here, expanding our reach here in Central Visayas. And we're really looking at building confidence and enthusiasm for our domestic and international tourists. So one way to measure travel confidence, I'd like actually, aside from the bad news brought about by the rising fuel cost, at least now there's really, I would say that there's really, we're gaining momentum in terms of building confidence because we're seeing an increase in passenger traffic at the airport. We're actually instructed by NIA to return to Terminal 4 after its closure for more than, for 2 years because of the pandemic. Now that there's really an expected influx of passengers for the whole week and for the summer demand, we are returning to Terminal 4. And it's also good news for us. We will open more domestic and regional destinations this summer. So that, as mentioned to you, we're opening Dumaguete on April 8th, and then we'll be opening Rojas sometime May or June of this year. And we're looking at also relaunching our regional flights to Indonesia, to Thailand, to Kuala Lumpur, and to Incheon. So it's really a good news, but it would also depend on the interest of people traveling. So we're looking at a revenge traveling scenario actually. That's why we're ready, more than ready to cope with the demand.
Okay, I don't think wanting to travel is the issue there.
I think you're the target market for that one.
Exactly. But finally, before we let you go, companies are of course revisiting their growth targets for the year, and you guys have set specific targets. To what extent is this at risk for a downside risk? Another thing, we were very much hoping for that IPO to be happening. Right. Is that still in the works?
Well, for now, we're really focused at rebuilding our domestic market as well as reopening some of our international market. We're looking at, based on our 5-year plan, we're looking at expanding our route network from the Philippines to Middle East to Australia and America. That's part of our 5-year plan. But of course, going to that IPO is also part of that plan. But for now, we're really focused on rebuilding confidence in air travel, as well as making sure that we remain viable as a business. And we'll see when that IPO happens.
All right, stay strong there, and hopefully we do see you guys, getting off the ground more than ever. Thank you so much. That was, of course, Steve Dailisan, spokesperson of AirAsia Philippines.
Thank you, and flying with you soon.
Now, coming right up after the break, manufacturing growth slowed down in January.
We'll tell you why when Business World Live returns. Stay with us.
still watching Business World Live here on One News. I'm Jess De Los Santos.
And I'm Danny Laurel.
Prices of some basic commodities are also expected to soar amid global tensions, but the Trade Department says there's no need to adjust suggested retail prices just yet. Mobile journalist Pamela Vasquez with the story.
The ongoing conflict is expected to have minimal impact on trade with the Philippines, but DTI Secretary Mon Lopez warns that food and mineral prices are likely to go up.
Nakikita na natin ngayon yung presyo ng oil, ng wheat, ng corn, iron ore, naapektuhan yung ibang bansa kaysa sa kanila kukuha, pupunta na sa maybe hindi sa Russia and Ukraine, mapupush up yung presyo dun sa mga ibang bansa. Kaya yung global market price natataasan.
Russia and Ukraine are two of the world's largest producers of wheat. But for now, the Trade Department says no price adjustments will be made on basic goods like bread because there's enough inventory.
Assumption po natin dyan, yung mga manufacturers po natin were able to produce these products using inputs that they purchased na hindi pa nangyari yung gulo o yung sunod-sunod na pagtaas ng presyo ng fuel.
Trade between the Philippines and Ukraine and Russia is quite small. According to Lopez, Ukraine is only the country's 48th trading partner, while Russia sits at 27th place. The total trade between those two countries and us does not even reach $1 billion a year.
Kahit pagsamahin natin yung dalawa, wala pang 1% of Philippine trade. So ganun kaliit lamang yon.
From Russia, we mostly import iron, steel, and vaccines. There's been no indication that the Philippines will impose sanctions on Russia like Western countries did. Lopez says they're also working with NEDA and other agencies to reduce the price of coal, which is still our biggest power source. Mobile journalist Pamela Vasquez, We Are One News.
All right, Dan, corporates are now beginning to reassess their targets for the year. That's on the back of those skyrocketing fuel costs. Tell us more.
That's right, Jess. We actually have two of our biggest conglos revisiting their plans in a big way. First of all, you've got SM Investments Corporation. That's, of course, our largest conglomerate by market value. They say they may revise their plan this year. That's according to Vice Chair Tessie C. Coson. She said that in a Bloomberg TV interview, saying the surge in commodity prices could drive operating costs higher and dent consumer demand. And they were hoping and anticipating, of course, a pickup in that retail demand with the Philippine economy reopening, COVID infections slowing down. So that's one issue that they're saying when they see the stock market going down, we need to go back to the drawing board and redo a lot of things. However, you can see SM jumping by 19 pesos this morning. Together with the rest of the markets, I have to say that's up by 2 2/10%. Now, joining them is another big conglo, of course, that is Metro Pacific. And they said that they need to take a step back, take a look at their risk management across the group. This is according to their CFO, June Cheryl Cabal-Revilla. They said this in a video streamed media briefing. And we also have Chairman MVP weighing in on how the oil prices will be affecting their performance this year. Let's listen in.
I think in respect of elevated petroleum prices flowing from the, last night I think crude oil was breached the $130 per barrel mark. So that could impact, at least in respect of our tollways, could impact the traffic volume if it's more expensive to use your cars or trucks to travel. So that could impact the traffic volume, the impact on power rates.
Yes, Jess, and this as, of course, they did mention that their core earnings could grow by high single or low double digits sana this year. So that might be changing. They did report their net income for 2021 full year was 10.12 billion pesos compared to the 4.75 billion pesos, in 2020. So it's more than double. And prior to the Ukraine crisis, MPIC actually anticipated growth of close to 20% in their earnings. Another issue on the toll road, they were looking at an IPO, if you recall, and they have now said that they will wait for the revenue to stabilize before deciding whether that IPO can still be done in 2023. But Jess, another one that's enjoying some gains here, up by 1.6%, trading at 3 pesos and 75 centavos.
Okay, our conglomerates recalibrating. Well, let's zoom out a bit here. Dan, yesterday the main index rebounded as investors buy bargains. Are we extending that today?
In fact, we are, and the great news is that we are back to 7,000 levels here, Jess. Finally, in fact, we're breaching 7,100, so quite some volatility. We're up by 1.6%, even as if you take a look at the 3 days, of course, hindi natin binawi yung more than 4% decline, and this follows, 3 straight days after which we, jumped yesterday. We had declined by 5.5%. So, good news for those bargain hunters that came in before this actually jumped. Let's also take a quick peek at the movers here. I want you to see how everyone is actually performing quite well, save for Emperador sitting out this rally down by 5 4/10%. And finally, Jess, just one more quick check on the banking sector. This as the PSE has now approved the IPO offer for March of Bank of Commerce. That's going to be set to the public on March 16 to March 22 with a listing on March 31st.
Here are the other headlines we're keeping our eyes on. Factory output growth slowed for a second straight month in January. That's following the reimposition of tighter curves due to the Omicron-driven surge. As measured by the Volume of Production Index, manufacturing grew by 16.5% year-on-year in January. This was slower than December's revised 21.3% growth, but a turnaround from the 14.5% contraction recorded in January 2021. This was the second straight month that the volume of production recorded slower growth. Recall that Metro Manila and other areas of the country were placed under Alert Level 3 in January to arrest the Omicron surge. But January also marked the 10th consecutive month that factory output posted a positive reading. Now, analysts say the BSP may start raising its benchmark interest rates before mid-year to quell inflation risk caused by the Russia-Ukraine war. CLSA senior economist Anton Nafte expects a 25 basis point increase by mid-2022 and then another 50 basis point hike in the second half. This on the back of inflation possibly doubling to around 6% in the coming months from the 3% in February. BSP Governor Ben Jokno previously said that the central bank would remain accommodative and wait for 4 to 6 straight quarters of economic growth before considering a rate hike.
The Fiscal Incentives Review Board rejected a petition by PEZA to extend work-from-home arrangement of registered IT-BPM companies. Now, under an FIRB resolution, registered IT-BPM firms are allowed to offer work-from-home arrangements to a maximum of 90% of their personnel until March 31st. PEZA requested an extension until September 12 to give companies sufficient time to revive their operations in economic zones. But FIRB Chairman and Finance Secretary Sonny Dominguez says the IT-BPM industry should already be shifting to more on-site work as vaccination rates rise.
And that's a first look into the business day this Thursday, March 10, 2022. I'm Jess De Los Santos.
And I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.